There is a company that just make pipes. Do you know how much returns it gave in the last 10 years? 1573%. Yes, you heard that right. And the most interesting part is the real story is just getting started. The business everyone ignored. Most people hear Welspun Corp and think pipe company, pouring business. But this is exactly the mistake retail investors make. They judge a stock by its name, not by its actual business. If you also pick stocks just by their names, this video is for you. Today, Welspun is not just pipes. It runs four different businesses. Large pipes for oil and gas, ductile iron pipes for water supply, Syntex water tanks, and stainless steel products. And it operates in three countries: India, US, and Saudi Arabia. The number that broke the internet. The company just won its biggest ever order, 17,200 crores, to supply pipes from its US plant. The single order is almost 30% of the company's entire market value. With this, the total order book has touched $4.4 billion, around 42,100 crores. An order book this big means revenue is already secured for years ahead. That kind of visibility is very rare. Why the stock exploded? One good order alone doesn't send a stock up 75% in 3 months. The real reason is the fundamentals. Return on equity around 24.6%, return on capital employed around 22.3%, meaning the company uses its money very efficiently. Debt to equity just 0.24, a very low debt. June quarter profit jumped 198%. Year on year in FY26 revenue grew from 13,978 crores to 16,770 crores. 20% growth. EBITDA jumped 41%. When revenue, profit and order book all rises together, that's when a real multi-bagger is born. Not from just one good news headlines. And the company did all this without weakening its balance sheet. Even after spending 2,532 crores on its expansion, it still ended the year with more cash than debt. The real story is US plus Saudi Arabia. Here's where it gets interesting. Welspun biggest opportunity isn't in India anymore. About two-thirds of its order book now comes from the US market. And it's not just about pipes. Rising gas infrastructure demand, power needs from new data centers, fresh oil pipeline investments are all fueling this. Saudi Arabia is also shaping up to be the next growth engine. New capacity that should start contributing from FY27 with full benefits visible by FY28. When a company moves from the spending phase to the earnings phase, that's usually the time worth paying attention to. The valuation reality check. But here's something worth being honest about. This stock isn't cheap anymore. It used to trade around 15.3 times earnings. Now it trades at 22.9 times, in line with the industry average. The market is no longer treating it as a low quality cycle. A good story doesn't automatically mean today is the right time to buy. Always check the valuations too. The risks that most videos won't tell you. Every multi-bagger story has another side. New capacity in the US and Saudi Arabia needs to start on into actual revenue. The domestic water pipe business faces overcapacity and payment delays from government projects. Raw material cost and global tensions can still affect margins. A smart investor never looks only at the story. They read the risk just as seriously. The biggest lesson. So the real question isn't what Welspun does next. The real question is how many multi-bagger stocks have you already missed just because you judged a company by its name or its sector. Multi-baggers are often hiding exactly where people stop looking. In boring sectors where the business is quietly transforming long before the market notices. The real lesson is understand the story, not just the charts, and always look at growth, balance sheet strength, and valuation together, never just one of them. Which company do you think is the next Welspun? Comment below. Disclaimer is this video is for educational and information purposes only. It is not an investment advice. Please do your own research or consult a registered financial advisor before investing. Thanks.